If you are trading the 1 minute chart throughout the day, you are probably giving yourself far too many opportunities to lose. I don't trade every hour. I focus on two specific windows, the 3 to 4 a.m. London window and the 9:30 to 11 a.m. New York window. In this video, I will show you exactly what I look out for inside these windows, which is my approach to the ICT Silver Bullet Time-Based Model by Michael Huddersfield, the Inner Circle Trader on YouTube, 2023 mentorship. You can search for him on YouTube. I will also show you how I use the 1 minute chart for execution and when I simply stay out of the market. Now let's break it down. Hello traders and welcome back to FX Pilots, where we break down the concepts and strategies that can help you become a more precise and disciplined trader. In today's video, we are going to break down my two window 1 minute model, including the London and New York execution windows, what I look for inside each window, and how I combine time, liquidity, and price action before taking a trade. This setup is based on the ICT Silver Bullet time-based model. Okay, so the ICT Silver Bullet time-based model is grouped into three. We have the London Open Silver Bullet time-based, which is from 3 a.m. to 4 a.m. We have the New York AM Silver Bullet time-based model, which is from 10 to 11 a.m. Now, I decided to start from 9:30 so that I can clearly see the manipulation at 9:30. Credit to the Inner Circle Trader, Michael Huddersfield, ICT 2023 mentorship on YouTube. You can search him out to watch the video and also follow him on YouTube. So the third is the New York PM Silver Bullet time base, which is from 2 p.m. to 3 p.m. The trade condition based on my approach. Okay, so but from ICT, you will discover that he considered key levels on higher time frame like the previous day high, previous week high, previous month high, and the rest, fair value gap and the rest. But based on my own approach, it is purely on the 1 minute time frame. So now I will show you the indicators that I use. The indicator will mark out our 3 a.m. or 9:30 a.m. opening price horizontal line. So we'll buy below that horizontal line and sell above that horizontal line. Then the time frame will be 1 minute only. What we'll be looking for is liquidity sweep plus strong displacement, change in state of delivery, and fair value gap, which gives us the unicorn model. The unicorn model was developed by the Inner Circle Trader himself, Michael Huddersfield as well. So that is what we'll be using as our model for entry. Now, my entry conditions. Before you enter any trade or before you take a trade, you must have at least two of the following conditions listed below: the liquidity sweep, the smart money technique divergence, the swing formation, the fair value gap is compulsory, the inversion fair value gap, the breaker block, and the order block. At least two must be present before you take your trade. I will show you all of this on the live chat. The entry methods will be breaker block, order block, fair value gap, change in state of delivery breaker candle, and we'll be targeting 1 to 2 risk reward or 1 to 3 risk reward or weak highs and weak lows. So these are just the parameters for this strategy. Now let's go to the live charts for examples. All right, so here we are on the first example. This is Euro USD 1 minute time frame. So before you start, ensure your time is set to UTC-4, that's New York time. Okay, so I will show you the indicator that I'm using. This is, just search for ICT key zones and pivot in bracket TFO. Okay, so let me show you the settings for this strategy. You can pause the video and copy the settings. Look at it. My text color, depending on the background of your chart, is my text color. I'll show you everything. This is draw to this. My Asia session 20 to 15, that is normal. This is my color. You need my exact color. Here it is. You can copy it. My London 3 to 4. Remember, this is the ICT Silver Bullet we are looking at. So my color is this. Opacity is 5%. Then for New York, Here's my color. So if you need the color, I set to 5%. Let me show you the color. This is the value, just copy it, set it to 5%. That's it for this. Then the box transparency, I put it on 90. Okay, the higher the number, the dimmer it will be. Okay, if you lower the number, it will be too out. So I don't want it, I want it darker, I want it dimmer. So this is the only thing I ticked here. Look at all my settings. You can pause the video and copy it the way it is. Okay, look at it. The opening price. This is my color I use depending on my background. So the days of the week at the bottom, I use midnight. Don't use midday. Okay, use midnight. Hide the weekend level. Don't want Saturday and Sundays to show. So now this is the most important part. So I decided to start from the 9:30 to 11. Remember the silver bullet AM New York AM session start from 10 to 11. It's just 10 to 11, but I decided to, remember we normally have news by 8:30 and 9:30. Okay, so I want to see that manipulation. That's why I included this. And here's my color. You like my color? This yellow line you see here. Then 3 o'clock to 4. That is for London, if you trade during London. The other one is the PM. I don't trade during the PM, so that's why I'm not using that. So I will only concentrate on the London and the New York AM. Okay. My style is this. So just look at, that's it. There's nothing more. Yeah, look at how it is. Nothing. And that's it. So you can save it as a default if you want to be maintaining this strategy. All right. So now the first example here is on Euro USD. Like I said, on 1 minute. So remember the rules. The condition says we'll buy below the 3 a.m. and sell. So the 3 a.m. horizontal line serves as your discount and premium. Discount and premium. So when price opens, this is the Asia. When price opens, okay, and rally down, we want to see price rally down and sweep liquidity. Remember the conditions, our entry conditions. Can watch the video again. Price must sweep liquidity. Okay, we want price to sweep liquidity, or price should run for a case of continuation. Now, in a case of continuation where you see price break structure and then mitigate on an order block, okay, when a situation like this is a continuation. So continuation can be considered after a sweep of liquidity. So there must have been a sweep of liquidity, okay, that resulted in this continuation. All right, so now remember I said at least two should be present. So we have a sweep of liquidity, then we have a change in state of delivery. Look at it very well. We have a change in state of delivery. That's condition 2. In other words, change in state of delivery. Then we also have a breaker. This is our breaker. The last up candle. The last up candle. You can decide to mark it from here. I always mark mine from here. The last up candle before the sweep of liquidity is your breaker. And the last down candle before the sweep of liquidity when selling is your breaker. Now, remember we said that for a unicorn model to be confirmed, there must be a fair value gap. As you can see, there's a fair value gap. Okay. And our entry will be what? Our breaker. Our breaker. Now we have condition 1, sweep of liquidity, order block, which is our change in state of delivery. 2, breaker. 3, fair value gap. 4. So this is the more the confluence, okay, the more these things are on the chart, the more it is telling you that this price is going to hold and market is going to, that this this system will work. Okay, the more you see these conditions, the more it tells you that yes, what you're doing, you're in the right direction. Okay, so our trade, our entry will be on this breaker and stop loss below the breaker. If you are not okay with this, now you can see the stop loss is 0 point something, so you can make it 1 pip, at least 1 pip, 1 pip. Okay, now from Michael Huddersfield, the ICT trader, the inner circle trader, he said you can get 5 handles if it is indices, which is equivalent to 10 pips, 10 pips for Forex. Okay, so but we are not going to go for 10 pips. If we go for 10 pips, we will get 1 to 10 risk reward ratio. Okay, you can target, 1 to 3, 1 to 2. Okay, 1 to 3, 1 to 2, as the case may be, and take 1 to 3, 1 to 2. But my Huddersfield recommended that if you have 5 handles, which is 10 pips on Forex, will give you this. Okay, so apart from that, if you progress, you can see that price did a change in state of delivery here, and then what did you see? A pullback, a pullback, and then what did you see? That is, if you want to enter again or to add more position, you can see there's a fair value gap here, and price came to this, and then we have a breaker. This is our breaker. So that can be entry number 2. Guys, please follow me on this. Follow me. This is a 1 minute time frame. Stop loss below the breaker. 1 pip is okay. Okay. And you can target again 10 pips. But I'm not advising you to go for 10 pips. You don't always get to 10 pips. So you can take 1 to 5, 1 to 4, 1 to 3, or 1 to 2. You can be taking 1 to 3, 1 to 2.5. That's okay. So now that is it for London. This is London. You can see this is from 3 a.m. to 4 a.m. This is the period, silver bullet window for London. Okay, for London. So that's how you trade it when price is below. So if price goes up, okay, if price goes up and gives you a change in state of delivery, we have a change in state of delivery, price come back into your fair value gap. Okay, you want price to respect your fair value gap. As you can see, this is outside our window, so that's why we will not consider it. It's outside. Or the fair value gap here. So look at what happened. Price disrespected our fair value gap. Even the supply zone here as well. So we'll not trade that. So let's go to the New York AM. So the New York AM, remember what I said. If price goes below, if price goes below the 9:30 a.m., okay, we'll be looking to buy. If it goes above, we're looking to sell. This is my own approach. Now, remember I said when price goes above, when price goes below, I want it to sweep liquidity, because liquidity is the fuel, okay, that pushes price up and down. Without liquidity, market cannot move. So we want to see a sweep and a change in state of delivery. If this is an SMT, fine. So if this is an SMT with GBP USD, if it gives you an SMT, then this will be your change in state of delivery. This will be your change in state of delivery, and remember there's a fair value gap there. So you have, remember we need at least 2 conditions to enter the trade. So this is, if this is an SMT, condition number 1, sweep of liquidity, condition number 2. So we have already gotten at least 2. So we are good to go. And then a fair value gap, which is compulsory, should be there as well. And know that this fair value gap may be respected in the future. It must be respected in the future. Let's see. See what I said. So this fair value gap must be respected in the future. but this is outside our window, so we are not trading that period. So now let me tell you something. Once you have one, two, three conditions, remember there's a breaker here. This is your breaker. This last up candle. So this is your breaker. Remember. So now you can enter with the breaker candle. Remember our entry methods, the CISD breaker candle, the breaker block, the order block, the fair value gap. Okay. So now we can enter from here. Target 1 to 2, 1 to 3. Or you can target weak highs and weak lows. Now in this case, I will not put my stop loss here. I'll put my stop loss here. My maximum stop loss is 2 pips. Maximum 2 pips. Anything more than 2 pips, I will not go. I'll make sure it is within 2 pips. Then I will target. You can target, sorry, I forgot to add, you can target this opening price. The opening price is another good area to target. It always attract price. You can target that, or you target, look at this equal low, this equal highs. This is a weak high. So you can target it as well. So it's giving us 1 to 2, 1 to 3 point something. So 1 to 3. Okay. Like I said, if you want to add position, look at a continuation trade. This is a continuation trade. Now in this case, there is a swing formation. There is a swing formation, so that's condition number 1. Then there's a change in state of delivery, that's condition number 2. And then there is a breaker here, condition number 3. So in that case, we can enter with this breaker or the order block. Place your stop loss below. Now, if you say you will place your stop loss below this breaker, market would have taken you out, because look at this is too small, 0.8. So you can look for to add like 5 pips, or if you when you check the lowest point and it's still within 2 pips, you take it, you go with that. Okay, you go with that. You go with that. Or if you don't want to enter with this, target 1 to 3 or target this opening price. Or if you don't want to go with that, okay, if you don't want to go with that, look at this. So if you want to be more conservative, when price comes, there was an inversion fair value gap. So here we have swing formation and an inversion fair value gap. So condition number, that's 2 conditions, and there's a fair value gap as well. There's a fair value gap as well. So this is giving us almost 3 conditions. So in situation like this, you can enter with this breaker candle, target 1 to 2. Enter with the breaker candle. There's no stop loss below. There's no fair value gap below this, so I may take this. Target 1 to 2, 1 to 3. Okay. Also, if you want to be more conservative, you wait for price to come and then give you close above this. You can enter with this bullish candle when price close in your direction. So price closing in your direction can also be another entry. But when you see, look at the stop loss 0 point something, you can make it at least 1. And take 1 to 2, 1 to 3. So that is how you enter. Those are the conditions you look out for. So you can see that in just one, this is a good scalping strategy. Silver bullet. This is my own approach. You can watch the ICT, his own approach is different. He works from the higher time frame. Okay. And in the way it does his own is you wait for price to sweep major liquidities, which is very good and excellent. You can take that, but this is my own approach. So in a single window like this, you can get like 1, 2, 3, 4 entries. Okay, 4 entries. Even here we'll get like 1 or 2 entries, and you are done for that day. You are done for that day. You are done for that day. That is just exact. That's just what we do. You are done for that day. That's how you trade it. So if you have any question, you can ask in the comment section. So now this is Euro USD. Okay, so now let's look at another example. All right, so this is another example on Euro USD, still on Euro USD, guys. So this is the pair I recommend. I recommend Euro USD because it works on any pair. It works on any pair. Forex, indices, futures, gold, oil, whatever. It works on any pair. But this is the one I am used to and the one I've backtested, and it works perfectly on Euro USD. Okay, you can try GBP USD as well. You can backtest. You can try it on your own. Okay. So now remember the condition. We said when price rally up, it's either price will sweep liquidity or it runs into a key level. Okay. So now we want price to cause a havoc. So when price is above, we look for sells. When price is below, we look for a buy. Remember our window. This is our window. Okay. This is our window from 3 to 4. This is our window. So what did price do? At the opening of the 3 o'clock candle, this is London as silver bullet. Price ran into this fair value gap. Price ran into this fair value gap and then did what? And swept liquidity. Guys, follow me. Price ran into a fair value gap and swept liquidity. So that's condition number 1. Condition number 2, there was a change in state of delivery. Watch. This is a consecutive candle that went up to sweep liquidity. So that's a change in state of delivery. Watch me, follow me, guys. That's a change in state of delivery. Now, where is our breaker? This is our breaker. This man here is our breaker. So we'll mark our breaker. So I hope you're counting. This is condition 1, condition 2, condition 3. So we have at least 3 conditions. So it means that it will definitely play out. So now, where is our entry? Remember, we said you can enter with this breaker, you can enter with an order block, okay, you can enter with a fair value gap. So I will go with this breaker or the order block. So if you're entering with the breaker, your entry point will be at this very point, this line here. Stop loss above this breaker line. It's up to you. If you check your stop loss around here and it gives you 2 pips, fine. It gives you 2 pips, fine. I don't want it to be more than 2 pips. And then you target 1 to 2. Okay, or 1 to 3. But I would advise you go for 1 to 2. Okay, go for 1 to 2. So if you're taking 1 pip here, okay, 1 to 3 will be okay. 1 to 3. Or you target this weak low. This is a weak low. This is the low that went up from where price is coming from. That's a weak low. And target the weak low. Okay. All right. So another entry point will be this order block here. This order block. That's another entry point. And then your stop loss should be above that order block. This order block. Okay. Your stop loss should be above that order block. Or target 1 to 2, 1 to 3. Or guys, watch. Or based on money transfer. Okay. Based on money transfer, this set of order blocks is where the money currently is. So this set of order block, you can take them. There's a breaker there as well. So that becomes another entry point. So whichever one you want to choose. So if I'm choosing that, if I'm choosing these people here, this set of order block, my stop loss will be above them because there's no fair value gap above me. So I'll just make it 1 pip. And then as soon as price come, tap in, you take your 1 to 3, 1 to 2. Okay, or you take your week low, as the case may be. So that is for London. Now let's look at the New York AM session. Now here is the New York. Look at what price did. Follow me, guys. Remember I said when price is below the horizontal opening price, okay, we want to buy. Now, we want price to do one or two or three things, which is one, price will either sweep a liquidity. Price swept liquidity and rested into this other block. Okay, this is an order block. And then gave you a swing formation. So that is two. We have gotten two conditions. This is condition number one. Condition number one. Price rested in, price gave us a swing formation. Condition number two. And then what did you see? An inversion fair value gap. I'm not going to consider this as an inversion fair value gap when there is another one up. I will take the last one. That is the one I will monitor. That's the one I will monitor. So once price close above that, you can enter with this breaker candle. Okay, you can enter with this breaker candle. Now remember that when price closed above it, there was a breaker. So don't forget. So we have about 4 conditions. So this is condition number one, condition number two, a swing formation, condition number three, and condition number four, a breaker, and then a fair value gap. Okay. So if you're taking this breaker, your stop loss should be below this candle here. But if I want to trade this, guys, the truth is, if I want to trade this, because of this fair value gap here, I will not take this entry. If you're taking this entry, okay, or you're taking this, make sure you cover down this. This is what I'm saying. If you're taking this breaker entry, make sure your stop loss is around here. Your stop loss is around here because of this fair value gap here, okay, or around here. So this is giving you a 3 pips. I will not take this trade. So this is what I will do. I will wait for a pullback into that breaker and a close above. And a close above. Once price close above those conservative sell candle, that's my entry. This man here or this man here is my entry. And remember, there's a swing formation. There must be a swing formation. So that candle closure, that swing formation, so this will be my entry. So that's how I will take this trade. Then I will comfortably place my stop loss below this one. 1.1 is okay. Target 1 to 3, 1 to 2. That's it. So remember that this movement you saw here started from below here. Okay, so it started from below here. We're already above it, so don't be, that's another thing too that you look out for. We're already above this, but that's why you need to take at least 2 pips, because since we are now above this, price will soon reverse. So 1 to 2 is okay. Remember, price have swept this equal high, so we'll be expecting a reversal. Now what did you see? Price is now above, so we are expecting a reversal. Now what is the reversal? Price swept this liquidity. There was no swing formation. Swept this liquidity, gave us a change in state of delivery. That's condition number two. Change in state. And then condition number three, there was a breaker. The breaker. And then condition number two, there was a compulsory fair value gap, which now makes this a unicorn model. Unicorn model developed by ICT himself. So our entry is very clear. Now let me show you. You can enter based on this breaker. Stop loss here. So you can enter here. Now this is in New York, okay? You can enter here. Stop loss here. So stop loss is within 2, so I will take. Or you can enter with this other block. Or you can enter with this fair value gap. But this is, let me tell you, this is where I will enter. Anytime you have a fair value gap like this, wait for price to react from that fair value gap and close below the consecutive up candles. Okay, so this is the close, or if you look at it very well, and this man close, Then I will take this one as my entry, or I will enter with this candle. Place my stop loss above here, or place it here, because this is giving us more than 2 points. So I will take 2 points. Target 1 to 2, 1 to 3. So that's it. That is how you trade it, guys. This is my own approach. Now, if you observe again, but this is giving us outside our window a supply zone here based on supply and demand flip. If you have not watched my video on supply and demand flip, go and watch it. Look at price, look at this demand zone. So who was responsible for taking out this demand zone? This supply. This supply. So look at what happened. Price came into it and did what? And gave us a rejection. As soon as price closed in our direction, that's our entry. Take that trade 1 to 6 and target this week low here. That's it. So you see opportunities within that silver bullet window. You see opportunity within the silver bullet window, guys. This is how you trade it. That's my own approach. If you like, you can take this approach. If you like, you can use the one by ICT or watch its own video as well. So this is my own approach to it. If you have any question, drop it in the comment section. Now, let's look at example number 3. Okay, guys, so this is another example. This is another example. On this day, you can see, let me zoom it. Price was clearly above. Price was clearly above our line here. Price was clearly above our line. I will not take this because there was no liquidity sweep. Although there was a swing formation, but I will not take this. So I will take this. Price was above premium price. Remember, this is serving as giving us a clear premium and discount. Price swept this and then gave us a change in state of delivery. All of those concepts all of them comes from the ICT, the inner cycle trade and Michael Holders field. Change in state of delivery, fair value gap, they are all his own concepts. He was the one that gave us all of those concepts that we are using. So credit to him. All right, so now we have a sweep and a change in state. So that's the reason why I will take this trade. And my entry will be this other block. Take this other block. That's the more pronounced man here. So I will take this. Stop loss above here. You can see. You can add like 2 pips on it. Targets 1 to 3, 1 to 2. Take 1 to 2, 1 to 3. Okay. You can also wait as price enter your zone and then close in your direction. That's another opportunity to take your trade too. So you can also take this. Make it at least 1 pips. Or you can still take it, no problem. Target 1 to 3, 1 to 2, 1 to 4, 1 to 5, as the case may be. Or you target this week low and target this week low. That's around 1 to 3. So this is for the London. Okay, this is for the London. Remember, this is our window, silver bullet window. So now let's look at the New York AM. Okay, so this is the New York AM. So what did you see, guys? Now let me tell you something. Price first went up, swept liquidity, gave you a change in state of delivery. So that was the first occurrence. Look at this. So, and also look at this. There's another block here. Look at what price did here. always open your eyes and look at the left hand side. Okay, that's another block. So price ran into it after taking liquidity. So you can see that there's every reason that price must obey, this must give you results. And then remember, there's a fair value gap. So that's giving you a unicorn model here. This is a unicorn model. So this is our order block that swept liquidity, took our liquidity from this size. Okay, that's our order block. Now look at this. Let me show you something, guys. Let me show you something. Price swept liquidity. Remember, there is a demand zone here. If you have not watched my video on supply and demand flip, go and watch it. There's a demand zone here. You can change to line chart, you'll see it very clearly. Look at this demand zone. So when price take out a demand zone, it will always leave a supply zone for you. This is a drop-based drop supply zone. So this is a supply zone that price left for us. So sorry, in the entry method, I was supposed to put supply and demand flip. Sorry, I didn't add it. Supply and demand flip is very important. So that will be my entry. So you either enter here or you enter from as soon as price close in your direction, or as soon as price rejected and close in your direction, or as soon as price rejected and close below. Those are possible entry. Price rejected and close. So this will now be your entry, or this will be your entry. This will be your entry. This will be your entry. So you can enter here, place your stop loss at least 2 pips. Okay. Remember, you're entering when price tap into it, or not here. This is your entry. So then here you can enter from here as soon as price close above here, close below, sorry, in your direction. Place your stop loss above that supply zone, at least 2 pips. Okay. You can also enter after this rejection. Okay. Target 1 to 2, 1 to 3. You can also enter after this rejection, price should close below. So when price close below this up close candle, then this breaker candle that close below comes your entry. This your stop loss above it. Target 1 to 2, 1 to 3. So that's it. That is it, guys. So that's how you trade this. This is my own approach to it. So this is how I trade it every day. This is how I trade it every day. I always look out for that manipulation to the upside or to the downside. Now look at this. You may be asking, say, let me remove it. But this was a movement that took out liquidity here. Yes, it took out liquidity. Remember, I said fair value gap is compulsory. Fair value gap is compulsory. There's no fair value gap here. Or if you may say there's a fair value gap here, price did not return to it. Price did not return to it. I will not take anything like this. No, I can't trade it. As soon as price has touched where I'm expecting my entry from, I cannot. So that's why this one will not work. But if I didn't bring price return immediately to this, after this change in state of delay, I will buy to this point. All right, so let's look at another example. Okay, so here is another example. This was the 13th of August 2026. These are all recent trades. All right, so look at what happened again here during the London silver bullet window. Look at what happened. Price came down. I will take it that price came down because this going up, there is no fair value gap here. Remember, I said fair value gap is compulsory. Price swept liquidity and gave us a swing formation. Okay, that's condition 2. and then there was an inversion fair value gap, condition 3. This is very important. Inversion fair value gap. And then what do we have? A fair value gap. We have a fair value gap here. And then we have a breaker as well. And then a change in state of delivery. You can see that almost all the conditions are there. So tell me why it will not play out. So, but you need at least 2 for it to play out. So now, let me give you an advice. This is your breaker. This candles you see here, this is your breaker, not just this one. So our breaker is from here down to this one here. This is our breaker. But those are the consecutive candles, up close candle before the sweep of liquidity. So this is our breaker. So if you're entering based on your break on that breaker, your stop loss should be below the breaker. Remember, the breaker was once an order block, so that's why we are considering the low to be important. Target 1 to 2, 1 to 3. Okay, 1 to 2, 1 to 3. You can also enter from this fair value gap, or you can also wait for price. Now let me show you something. You see this man that came and then this one rejected immediately. I will not enter because this is not a swing. It didn't give me a swing formation. It didn't give me, this man did not sweep this low. I need a swing formation like this. So since this one is giving me a swing formation and then price close above, I will enter with that breaker candle. This low is intact. So I will enter target 1 to 2, 1 to 3. So that will be my stop loss. As I have that swing formation, so this gave us 1 to 3. But guys, stick to 1 to 2 or 1 to 2.5. 1 to 2 is fine. Now you can see this. This gave me a swing formation. So that's okay. A swing formation, condition 1, and then an inversion gap, an inversion fair value gap, you can see. So I will take my trade on this breaker candle. Target 1 to 2. There's no stop loss below this month, so I will keep my stop loss here. There's no fair value gap below this candle. Sorry, guys. Target 1 to 2, 1 to 3. That's okay. So those are the, before you take any trade, ensure you set a rule-based system for yourself. Give yourself conditions. Price must meet so conditions before you take your trades. Okay. Look at, you can see this is balanced price range. This is fair inversion fair value gap and a fair value gap, making that zone strong. So even if price pull back into it, it will reject it upwards. Okay, look at, there's a fair value gap here again. Price came into it and immediately rejected. So those are the things. But now be careful because we are now above the opening price. We are now above the opening price. So price may reverse at any time. So that's why you don't need to continue selling. All right, so let's look at the New York AM silver bullet window. Let's look at the New York AM. So now what did you see? Cases like this, if you check very well, you will find out that you have an SMT divergent, or even here there will be an SMT. So what did you see price do? Price is below, so we are looking to buy. Price swept this liquidity. So condition number 1 met. Let me show you the price swept liquidity there. You can see price swept liquidity and then gave us a change in state of delivery. Now there's something I want you to note, which I didn't tell you in the other example. Strong displacement should cause that change in state. Strong displacement. So now we have a change in state of delivery here. We have a change in state of delivery and a fair value gap, which confirms this change in state and validates our unicorn model. So this is now our breaker, the last up close candle or consecutive up close candle before the sweep. So that is now our breaker. Now there's something I want to advise you guys. There's something I want to advise you. Now, remember, you see, I always consider this first pullback as an inducement. Always consider it as an inducement, especially or an incomplete pullback, especially when it comes and takes out its own high, comes back again. This is an incomplete pullback. Now, the reason why it is a liquidity is because now price pulling back has not taken any liquidity here. And then secondly, this man did not sweep this low and it didn't give us a swing formation. So I will look at it as an inducement. Okay. So now, saying this is my breaker, my stop loss will be here, but this is what I want you to note. Anytime you're placing your stop loss, don't place it exactly at this low, at least 2 or 3 pips below this breaker. This is 1 minute, so you have enough this thing. So let's say we are taking this. Okay, if we are taking this, your stop loss should be, if this was your stop loss, okay, if this was where you wanted to put your stop loss, add like 3, so that means 1.9, okay, or 2. Remember I told you 2.0 should be okay. Then you target 1 to 3, 1 to 4, 1 to 2, depending on you. 1 to 2 is okay. Or since this is a weak low, a weak high, you can target that high, this high that came, you can target it, okay. So then another thing, if you want to add position, now take note, this man that came down and swept liquidity, there is an inversion fair value gap here. Inversion fair value gap here. Now, price need to come back into that inversion fair value gap, and it should give you a swing formation. That's condition 1. So price entering your fair value gap or inversion fair value gap, it should reject immediately. Okay, we need a V shape. That's rejection. We need a V shape. And then what did price do? Price close above this. So that's when you cannot take this man. Cannot take this. Since there is a swing formation here, I will take this. You can place your stop loss below this man because there's no fair value gap below it. At least give it a 2 pips. So this is how you add position. Target 1 to 2, 1 to 3. Alright, so that's how I trade this silver bullet ICT model. So now you can see that price is now above our opening price. So you cannot see how market swept and then fell. So when price is above it, be careful. Stop buying. Be looking out for sells. If there was an SMT here, then this will make sense. So always look for those conditions when you're trading. Always look for those conditions when you're trading. Now remember that this man as well came into this other block. So those are the things you look out for. Came into this other block. Okay. Those are some of the things you look out for. All right, so let's look at another example. Okay, guys, so this is another example. Now, you see, this thing will save you from knowing, because people, we have that custom, or that we have that custom of whenever price is above Asian high, we always want to sell. But look at what is happening. Price is now above Asian high, but price is still going up. So these are the things that will save you from that trap, because whenever it's just a custom, whenever price goes above, we'll be looking for sell. Price will move up, we're looking for sell. Price will move up. No. So this is another example. Let's look at, this is our window. So take it. Let's look at it. So price took out this low into a fair value gap or into this other block. Into this other block. Okay. And then what we want to see an inversion fair value gap, and a change in state of delivery. Change in state of delivery is important and compulsory as well as fair value gap. So there must be a change in state of delivery. So two compulsory things, change in state and fair value gap is compulsory. So now situation like this, guys, let me show you something. Situation like this, when you have price sweep liquidity and inversion gap, you can buy here, you can buy from here, you can set your entry here, but make sure because of this fair value gap, make sure your stop loss is below here. Make sure your stop loss is below here because of this fair value gap. So when you have something like this now look like a premium and this look like a discount. So this fair value gap will now be at the discounted part, of this range. So always consider this is a range. This is a range. So if you consider from here to here, so this fair value gap falls within the 50, below the 50%. So this is the best area to buy from. Okay, please take note of that. Take note of that. So when you have fair value, two fair value gap like this, don't just enter here and buy. No. Wait for pullback. Wait for pullback. So now remember I told you that first pullback is always an inducement. So that first pullback is always an inducement, especially when it comes and take out its own high, come back. So this is an inducement. First fair value gap is always an inducement. When these are the things you consider before you take a trade. Liquidity, price must take liquidity. Ask yourself, this man that is coming, has it taken any liquidity before I can say let me buy? No, it has not. So that means this is the liquidity. So that's your inducement. Now when you see price like this, okay, and price takes liquidity and close in your direction, that's your entry. The moment price enter and reject immediately, that's your entry. But I will wait for this man to be, I wait for price to close above this last down candle. As soon as price close above this last down candle, that will be my entry. That will be my entry. Then my stop loss, to be sincere, my stop loss will not be below here, except this has gotten to the mean threshold, except this man mitigated into the mean threshold, then I will not take it. But I will keep my stop loss somewhere around here. Somewhere around here. So this is 2.0. So that's my acceptable stop loss. So now I will target 1 to 2, 1 to 3, as the case may be. So now there's another opportunity again. Price came into this other block. So when price comes into the other block, we want to see immediate rejection. So we want to see immediate rejection. This was a rejection, but that's not enough. So now you can see that's condition 1. There was a rejection. Condition 2, there's an inversion fair value gap. So this alone. And then condition 3, there was a change in state of delivery. Always put conditions. Have a rule-based system. Have a rule-based system that these are the things I must see before I take trades. Then you can safely take this and enter and target 1 to 3. Stop loss below here. Or if this is giving me less than 2 pips, I will put it here. It should not be more than 2 pips. Target 1 to 2, 1 to 3. Okay. So that is during the London ICT silver bullet window. So now let's look at the New York. Guys, if you have questions, just watch this video over and over. This thing happens within this window. ICT is a genius. ICT have spotted and noted these things. So it's just for you to now use your own, watch it, use your own approach. So that's exactly what I am doing. So price came into this breaker. Always look at the left. The left will give you, it will give you a POI, a valid POI. Price came into this. And then look at what happened. And then gave us a what? A swing formation. So price mitigated into a key level and gave us a swing formation. That's condition 1. Gave us another swing, it gave us a change in state of delivery, which was compulsory. Okay, in this case there was no fair value gap. Now the reason why I would take this trade is I will wait for to see how sellers react. When sellers come and then I see a close above them like this, that's my entry. That's my entry. So my stop loss will be 2 pips. Target 1 to 2, 1 to 3. 1 to 2, 1 to 3. Don't take, or you take this high. Okay, I will definitely take that high. From 1 to 2, 1 to 3. Don't be greedy, guys. Don't be greedy. So at this point, you can see price is now above our opening price. So we'll be looking forward, looking for sales, looking for sales. Look at how market sold down. Looking for sales, but this is outside our window, so we'll not take this trade. Let's look at another example. All right, guys. So this will be the final example. In fact, this trade just happened now. This trade just happened today, and because of this video that I'm recording, I didn't see this opportunity. Look at it, it just happened. This is just the current market price now. This is where market is. This is 17th August. Look at it. 17th August. This just happened just as I was teaching this. I was looking at this example. So it has passed. Look at it. Still that same window. Look at what price did. Look at what price did. Guys, this thing happen every time. This is where the current market price now. Look at this. Market came down and swept this. Guys, you don't know the kind of you don't know what I'm giving to you. You don't know. So price swept and gave you, that's condition one met, and gave us a swing formation, condition two met, and then gave us a change in state of delivery, condition three. This was our change in state of delivery. Okay, and then gave us a fair value gap. Now remember I said whenever you have those conditions, when you have all those conditions, okay, when you have all these conditions, this will be your breaker. You can enter on this breakout candle. As long as there's no fair value gap below it, you can enter on this breakout candle. Oh, I miss this trade. I miss this trade. So as long as this is giving me 2 pips, I'll be okay with this stop loss. I miss this trade. This is a trade that just happened this morning. Look at it. Giving us almost 1 to 7. 1 to 7. And then there were opportunities along the way too. Opportunity along the way. Now, the reason why I will take this opportunity because there's a swing formation here. There's a swing formation, and then price close below. Price close above this. So I can take this because we have condition one, condition two, as a proportion block, serve as an order block. Condition three, fair value gap. So I can take this without even waiting for this pullback and target 1 to 2 or 1 to 3. So I will take this. So this is giving me 2.5. You see, okay, sure. Okay. Target 1 to 2, 1 to 3. It's 1 to 3. So 2 opportunities came. Look at it. 2 opportunities. 2 trade. Just London. Guys, I'm not giving you what does not work. This is Asia. This is Asia. So many will be looking at price has gone above Asia. So we'll be looking at this is a trap. A lot of people will be entering, taking this sell. Oh, there's a sell here, there's a sell. So this is why you don't need to trade all the windows. You don't need to trade randomly. There is a specific window. Now, why I'm saying so is look at this is 2 o'clock. This is London open. Let me show you. This is London open 2 o'clock. So what happened? Price swept this high. Look at it. Price swept this high. Is that not liquidity taking? Liquidity taking, right? And there's a change in state of delivery here, right? Fair value gap. Look at it. Look at it. Fair value gap. Look at it. Stop trading. Just stop using wrong timing. Timing is very important. This is a time-based model, a time-based system. Look at what happened. It works like magic. Look at what just happened. And a lot of people will be trapped here, trying to say, oh, price have taken Asian high, let me sell. And again, let me sell, let me sell. Look at, and market keep going. Market keep going. So guys, this is current, this is where exactly where market is now. Look at it. 17th of August, Monday. Look at where price is now. You would have gotten like two positions here. So, but because I'm recording this video, I wasn't able to see it. I didn't bin after giving you the last example, the other example, and I came here and I saw this example and price is now here. We would have done it live. I've taken this straight live with you. All right, guys. So please go and watch this video over and over and try it on your own. Try it on your own. You'll see results. I'm giving you things that you will not regret. Once you follow it step by step, you'll make money from it. Pass your profit. Okay. So practice it. Try it on your demo account. Try it on your live account, and you will see results. Consistency. Now, all of these strategies that I'm giving you on YouTube, it's not that you must take all. Look for the one that suits your personality. Look for the ones that suit your lifestyle and say, this is the one I will take. Oh, I like this one. This is very easy and simple. I don't need to bother myself on everything on the chart. I don't need to be distracted. I just want to focus on these two windows. You choose this one, okay? And then practice it, and then you will see results. You see results, guys. That's how it works. Don't jump from strategy to strategy. Jump from one mentor to another mentor, and then at the end you see there's no result. Guys, just stick to this channel. Share this video to others. Share it. Follow what I'm doing here. Stick to it and apply it. You'll see results. I've been into trading. I've been trading for more than 10 years. So I know what I'm saying. These are the things that works. These are the things that works. I don't like to follow crowd. Silver bullets, the way other people are doing it, I don't do it that way. Many people say it doesn't work because they are using a wrong approach. This is the best approach. This is the way I take it, and it has been working. You can see this is current price. It works. It's working. Gives you clear direction. You don't even need higher time frame. You don't need higher time frame. You see it, everything clean and clear. All right, guys. So without I don't want this video to be too long. So if you found this video helpful, I would really appreciate it if you give it a thumbs up and subscribe to this channel. And if you want to learn concepts like this with practical breakdowns and real chart example, hit the notification bell to receive notification each time a new video is posted. Until then, trade smart, stay disciplined, and I will see you in the next one.